Well, it's another slow day for the cryptocurrency markets as the cryptocurrency bulls seem unable to propel prices to continually higher prices as we've just continued to languish in this consolidation area. So we have to ask ourselves the question, is now a good time to buy? Stay tuned to find out. Welcome back to Breaking Bitcoin, everybody. I'm your host, Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. Hopefully, all of you traders, investors, degens, and cryptocurrency enthusiasts are doing absolutely fantastic today. I am doing quite well today because I have finally finished my Bitwarden Unified video. Yes, that is right. I've been talking about it for about 3 weeks now. It has been a long and fruitful journey of me diving into the world of cybersecurity and personal password protection. But my course has been up online for the last several days. You guys can go check it out. Link is not in the description, but if you just go to our website, KrakenCryptocurrency.com, and go over to Academy, it's a completely free course. You don't even have to put in your email to enroll. You can just click on the dang thing. I'm basically giving it away. So you guys can go check that out. I'll walk you through step-by-step how to build your own Bitwarden password manager using their new unified client, brand new, brand spanking new. So there's no good guides, no good docs really on this unless you're a super nerd, which I'm not. So I built a whole guide how to do the whole thing from start to finish. So if you don't know how to set up your own server, register your own domain, or run your own software, navigate Linux, did all the hard work for you. So go check that out. And I'll be dropping the video most likely this Friday. I just finished editing it today. It's got to go to the review nerds for a review, and then it can come out to the YouTube. But let's get to the markets. Today is January 17th, 2023, and we're in the second day of the trading week. It's Tuesday. And so far, we haven't been able to see a lot of significant momentum. We did today put in a new high, but it was a Darth Maul scam wick. So yeah, so no breakout longs have been signaled out of this area. We've been in range trading status, but now that volatility is starting to tighten and compression. We're trading up in an ascending channel towards resistance, making higher lows and so far higher highs. So we're going to see. We haven't seen a significant break because this is what distribution would look like, kind of an ascending wedge type pattern where we do end up breaking down to the downside. And let's go to the chart so we can break that all down. As always, if you enjoy the content, the like button and the subscribe button is right down there. Thank you very much. And if you're interested in working with our team to grow and build wealth in 2023 via the cryptocurrency markets, check out the links in the description. Lots of ways to get involved in our community. All right, let's get rolling. Okay. Woo, but wait, there's more. But wait. So excited, I'm drooling over here, you know? Okay. Anyways, so we've got some interesting stuff today. So before we hop down to the hourly chart here, actually, let's do that. I kind of like the current events. So we'll just stay right where we're at. So what have we seen over the last couple of days of Bitcoin? Well, we peaked over here on Saturday, right? And, the last time I peaked was at Lollapalooza. So we peaked over here on Saturday, and then we've basically listed lazily to the right and slightly upwards ever since then. We've had quite a bit of volatility, a couple of nice mini trends down on the lower time frames, which are notoriously difficult to catch. And the main trend here, I want to point this out because this is so important. I'm going to zoom in here a little bit more. And this is a concept that we see and talk about all of the time, which is stair steps up, elevator down, or escalator down, depending on who is saying it, but this is 2023. I only ride an escalator at the airport. So elevator down. And what we're seeing here is that price within this range takes takes a significantly larger number of candles to advance to a new high or to reach an overbought area. So if we go down to the 15-minute time frame, we can see this a little bit more clearly. And let's throw on the reversal template. Okay. So let's scroll out, zoom out, load out, roll out, and we can see. Look at overbought areas from the wave trend oscillator right here. And we have an area here. We also have this area here. We also have this area here. And we also have this area here. All decent areas to have gotten into range shorts, trading this range right here. Very similar with our somewhat overbought areas here and here and here. And here, also corresponding to both our CM Williams VIX Fix indicating good areas to buy and our CCM Laguerre indicating good areas to sell. Why have I not completely gotten rid of the VIX fix and just used the CM Laguerre? Because, hey, it's basically got the same thing in there. I don't know. I'm a victim of habit, as we all are. Shout outs to Alex81SG, Mr. Ether, long time standing hardcore cryptocurrency, my friends. Good. Welcome to the channel. Welcome back to the channel, that is. You've been here many times. All right, moving on. And we can even see it more clearly down here on the intraday time frame of the 15-minute chart, how much longer it takes just in terms of quantity of candles to rise to these overbought areas and how fast we move down. And that's even more evident here on the hourly, where we can see this very clearly, right? Small candles up, and then big candles down. And that's just always how it's going to be, because greed is more logical than fear. And I've talked about this before. Greed is a little bit more logical than fear. They're both irrational emotions. But when individuals are scared and they want to get out of their position, either because they are concerned the price is going to continue to go lower and they're going to lose money, or they are afraid of losing money, and so they want to lock in profits and they sell at the top. Unfortunately, the first example is actually far more common in the cryptocurrency markets than the second example. But either way, price will move down quicker than it will move up on average. Now, obviously, we did just see a very impressive and powerful bullish run right here. But the situation remains the same. What have we seen? Let's go out to the daily. And actually, we're going to go to the weekly, and we're going to kind of start down now with our top-down analysis that we normally start off with, but we just kind of started there on current events, and we didn't necessarily draw any conclusions. Just a quick disclaimer. Yes, I'm still holding weekly longs, and I am currently short intraday. All right, keep that in mind. What have we seen throughout this bear market? What do we always see in all bear markets? Small candles up, big candles down, small candles up, big candles down, small candles up, big candles down, and so on and so forth. So this area of the market is interesting. We are now trading, of course, above the 21 weekly exponential moving average, as well as the Tenkan-san leading line of the Ichimoku cloud, both which are fantastic baselines and have been very good arbiters of determining the overall trend of Bitcoin since it broke down below both the 21 weekly exponential moving average and the Tenkan-san leading line on the same candle back in November of 2021, heralding the official end of the bull market and the beginning of the bear, which we have been in since then. Now, I prognosticated about this last week that, or actually starting 2 weeks ago, that, but significantly last week as price started to climb. And I asked myself, is it possible that the bear market is over? Is it possible that this is the beginning of the rise to new heights of Valhalla that we will never be able to turn back from again? Maybe. Let's, to get an idea of how likely that is, let's go back to the last bear market. You guys remember these days? The good days? The 2017 days? Those were good. And so just to get an idea of what we might be experiencing here right now, let's look at how price responded. So back in November 2018, or excuse me, this is November 2018, but back in December of 2017, we reached our all-time high, about 19,900. And then price began this very, pretty quick, honestly, descent down. And then we consolidated in this descending triangle pattern for the better part of 2018. And then it was in a fateful day in November. I was actually live. You guys can go back and watch this live stream. When we broke down below support and descended another 50% into the bowels of El Diablo, where we went from 6.5 to 3.5 in the matter of a month. And there we got one big up candle, consolidated sideways for the better part of 3 months, and then broke up mightily, and then it was up only after that. So I want you guys to look carefully at this area of the market, and then we're going to jump forward to our current area of the market. And there do seem to be quite a few similarities here. We have, essentially the prevailing dominant direction to the downside. We have a significant period of downside consolidation, followed by weakening lower highs, followed by a quick drop of the bottom break of support, a little bit of consolidation, and then a quick big greenie back up. So again, we're going to go back to 2018. And it is unclear. Here's the question, right? If this is the situation where, last time we had a bear market, we had about a month of downside following that break of support, where this time we only had about a week, a big violent sell-off candle. So kind of it's as if these 4 weeks didn't occur and it's just this sell-off. And now we're seeing this. The question we need to ask ourselves is the current candle we're seeing right now this green candle or this green candle, right? This green candle or this green candle? And it significantly matters, because if it's this green candle, you get a pullback and you get like 2-3 months, it'll be like, hey, pack up the bags. We are rocked. We're going. But if it's this green candle, you don't get no pullback. The bus does not back up. It is onwards. So it matters. It matters. It matters. It matters. And here's the thing. Trading is not this stuff. I love doing the show because it's fun to speculate and talk about kind of the brain dump of what's going on in my head as I go throughout my day trading. And I write content now so much, but, this is just the stuff that I think about as I'm trading on a day-to-day basis. And it's just fun to speculate. It's just fun to speculate. Prophet Bear, good to see you, my friend. So let me know what your guys' thoughts and opinions are. Do you think that the current market structure or price action is similar to what we saw back in 2018? Do you feel that there is likely some correlation between what we're seeing right now and what we saw back then? And do you think the last week's weekly candle, do you think that is the up and pullback candle, or do you think it's there's no coming back candle? While you guys think about your answers, let me hop back over to the chat. Alex81SG says, watch for the Bank of Japan's announcement later tonight. Think around 1 a.m. Eastern Standard Time. And Bank of Japan's been in some significant issues because, their interest rates, listen, I'm not an expert on the particular matter, but from what I understand and have used to trade Forex, Bank of Japan's interest rate has been rock solid for many, many, many years. And during this recent economic crisis or financial recession, global recession, they changed it. And that changed a lot of things. So they are, I believe, the world's largest creditor. I do believe that is correct. Mr. Ether Robert Warner hedged at 21,300 after reading your premium analysis today. A couple percent gain loss isn't going to hurt for the potential to buy lower. Your faith in me. Thank you very much, sir. Mr. Sir Teacher, thanks for watching on Twitch, my brother. All right, so concluding the conversation of whether the current weekly candle is this candle or this candle, what do I think? Here's the thing. In either case, two things happened. We didn't immediately tear off to the races. There was a period of consolidation in both cases, one longer than the other. And I think there's a significant reason for that. It's because you can't just stop and reverse instantaneously unless you're skiing. And even then, you got to have momentum. So there is still, and I think this is very important, there is still this huge chunk of the market that entered or positioned around this area that then had to sit through the FTX debacle. So there are a lot of short-term speculators, because remember, we've analyzed Glassnode a lot. We know that it is not long-term holders who are driving price action right now. It is short-term speculators. The churn of short-term speculation is high. The churn of long-term holders is exhibiting hodling behavior. This is data that comes from Santiment. This is data that comes from Glassnode. So that hasn't changed. So long-term holders are content to sit tight. And investors who entered into the market in this area, who got to sit through the FTX debacle, and now they're filled with a little bit of uncertainty. They're filled with a little bit of doubt. They're not sure where the cryptocurrency markets are going. Everybody's convinced that we're going to have another lower low, 12, 13,000, as I've talked about. They finally have an opportunity to basically get out at the best possible price they've been able to get out for, what, 3 months, 4 months? 3, 4, about 4 months. Sorry, that's what happens when you have a wife. All right. Yeah, buy the breakout, Mr. Ether says, and we'll get to that in a second. That's basically been my consistent advice. The JPY is too high. It's hurting Japan's exports. If the Bank of Japan takes a hawkish stance to bring it down, it might trigger a strong bounce on the Dixie. I would hope so. I hope so. Let's see here. Profit Bear, thank you, by the way. You've been a member of the YouTube channel for 24 months. Saying, yeah, this bear might become a bull. Much love to you, man. Thanks so much for being with us for quite a while. All right, let's see here. Okay, back to the intraday. Again, still seeing a little bit of sell-off on the intraday volatility of Bitcoin. Again, range trading strategies. So let's talk about two things. Let's talk about that buying the breakout that Mr. Ether mentioned. And let's talk about reversal strategies in a range. So I talked about this yesterday. Where the highs are significantly more important than where the closes are, okay? Because the highs is where the highs and lows are where the actual significant movers in the market are located. That's where their liquidity is located. All right. So I think it's very important to actually utilize, particularly in range trading strategies in ranges, to actually use highs and lows. So let's just go ahead and mark out what had been at that point in time our high and low. It's going to be these two lines right here. And let's select this one. And we'll make that a line, and we'll select this one, and we'll make it a line to distinguish it from our others. And then this will be support as opposed to the other one. Okay, so a common saying in trading is that the market can only do one of two things. It can either range or it can trend. And if you could tell which one it was going to do, you could always make money. Thank you so much, Profit Bear. I try. So the market can range or it can trend. And if you knew what it was going to do ahead of time, you could always make money. Or maybe even a little bit more specifically, if you knew what it was going to do in the moment, you could always make money. And so a common trope is that people will say, well, but you can't. You can't understand that. You can't know that. You can't. And that's true. But you can guess. But you can guess. And then you can take action in light of your guess. So what do I mean by that? Well, I mean that when you trade mechanically, when you trade with a system, when you trade with risk management, it's all baked in. You understand and you accept, you surrender to the idea that you need to be right. That is a losing proposition in trading. You don't have a way to predict the future. You don't. And if you want any evidence of this, if you want any evidence of this, all you have to do is get a little educated about how high finance actually works up in the upper echelons. And when I say that, I mean, I want you to look at the performance of funds, of financial institutions, and look at the churn. Look at the churn of traders in and out of top firms. Look at the results of some of the best professional hedge funds and firms during 2022. Look at these stories of, I can't remember his name, Ballin' Like Bill. He was leveraged 5X. Archipelagos Capital, I believe it was. And there's just a million stories like that. None, we tend to, as retail traders, we tend to put like the Goldman Sachs, and we put all these institutions, Three Arrows Capital, ECG, even exchanges. We put these things up on pedestals as if they're better than us, as if they have access to information that we don't have, right? So this is cryptocurrency, but when I was trading equities, kind of the idea, even among prop traders that I knew who were working at like smaller firms, who were like freelancers who do, this is the wrong word, but if you're working for a prop firm in the form of something like Forex.com or FXCM, like you're doing their challenges, so you're working for kind of some of these like online prop firms like I said Forex.com, but FXCM, the 5%ers, they don't necessarily always give you this massive suite of tools to use. They expect you to be able to trade and make money. And if you don't, they'll find somebody else. And that's how it always is. People think that if they get a job as a trader at a prop firm, then all of a sudden they're going to be gifted access to these tools or methods or methodologies or mentoring that's going to help them make money. And that's not the fucking way it works. Pardon my French. It is not the way it works at all. Trading is a very competitive and blustery, egocentric, egotistic, I know, closeted black box. Nobody talks to anybody. Nobody mentors anybody, keeping alpha tight to the vest environment. And because to have an edge, you have to be able to execute or exploit something past on somebody else, because trading is a zero-sum game. Yes. You know what? I just kind of guessed gaming, crypto, and blockchain, PTE. I'm not 100% sure that this is market update 1002, but I know that we have done like 99% of the videos that we have up online or up on YouTube, are market updates, and we have well over 1,000 videos. So I just guessed. And we're just going to start numbering them from here on out. So we're at 1002. Okay. So what do I mean when I say that? So this is really important to me, right? You matter. If you're watching this, you care about your personal finances. You care about learning how to trade better. You care about the markets. You care about growing as a person. You care about developing your skill set. You care about becoming more dangerous, more professional, more serious, more profitable. And that's good. That's an edge. Grind that axe. Work on yourself. There's nothing holding you back except the own limitations that you place upon yourself. You are smart enough, capable enough, competent enough to learn skills that you never thought you could learn, to learn how to do things that you think are completely impossible. You can. The human mind is an amazing tool. So don't put prop traders, professional fund managers, hedge funds, don't put them up on this pedestal. They don't know anything that you don't know. Well, they might have access to information you don't know, but they don't have some magical ability to successfully predict the future, right? Profitable traders focus on developing an edge based on data. They identify a potential edge in the market either by lots and lots of testing, lots of research, lots of probing and prodding, sometimes completely by accident. And then they work on optimizing that edge and focusing on it and narrowing down and scaling it up and then turning it into a business. treating it like a business, treating it seriously. It's not a hobby. We're here to make money. So don't put these people up on pedestals. Don't put anybody up on a pedestal, right? There is nobody that is intrinsically better than you. There are people who might be more capable at a certain task at a certain period of time than you. You can totally get there. Just because somebody went to Harvard, just because somebody studied computer science, I'm sorry. I know half of you guys are CS grads and Python programmers, and I'm a newbie in that field. I'm pretty decent with my own little subset of code that I've worked on. But these people, quants, they don't necessarily have the ability to be profitable traders. I've worked with lots of quants in my day, some incredibly talented and gifted ones, and that didn't make them good traders. They still had to work at it. So that's all I'll say about that. All right, so back to guessing. We're guessing. So oh, just Peckham is okay. Okay, sorry. I didn't scroll up and see that was you. Thanks, brother. Thanks for watching. Yeah, Alex81SG. Goldman Sachs reported today a 70% decrease in earnings. It says a lot when banks don't do well. Exactly. Yeah. So these massive funds with thousands of analysts, trillions of dollars under asset management. They don't know shit. They don't manage their risk. They don't follow the strategy, but you can. All right. And this is something I've told, my students for years, is that there's lots of people out there who can get rich quick and get broke just as fast. But what I teach, what I practice is, I used to say like getting rich consistently, but that's not necessarily what it's all about. It's focusing on consistency, right? I want to be able to trade profitably my entire life. And momentum's a hell of a thing. If you would have told me 5 years ago, I'd be in a position where I would just trade full time and make content, and I wouldn't have believed you. Anyways, guessing. So there's different ways that I do it, but a good discretionary way to do it, if you don't have an indicator or a particular strategy for it, is that if you've seen a pretty big run up and then you see the market do two things. One is put in big wicks to the upside and then move down and put in big wicks to the downside. You can guess that a range is about to form, and you can start range trading that range. And what is one of the best ways to range trade? Well, one of the best ways to range trade is get a setup that looks kind of like what I have here, where you're probably going to want something like a moving average or Bollinger Bands or Keltner channels or Ichimoku or something like that. So you know where the mean price is. So this is the average of price. And then VWAP works here well too, or VWAP with standard deviations is very similar to Bollinger Bands. So then you have your extremes, 2 standard deviations away from the mean is pretty extreme. So default settings on Bollinger Bands, or if we were to put the VWAP indicator on here and set 2 standard deviation bands above that, that would work perfectly fine. But I think people are like, VWAP's better than Bollinger Bands. It's like, yeah, kind of the same thing. They do the same thing functionally. So. And then you want a momentum oscillator that helps you identify overbought or oversold prices. And as you can see, I've kind of got a couple of different ones of those. So just whatever flavor is good. And then you're going to be looking for high volume for your entry candle. And you're going to want to enter in the opposite direction. So you want to wait for a situation where ideally, so let's go down here to the 15-minute time frame, and we'll see if we can't spot perfect setups. Okay. So we identified, or one way we could have done this is that we identified that price was in a trend, and then we put in something that looked like a big blow off top with really high volume. And then we start to see price kind of go sideways, and we put in big wicks to the downside, high volume move that doesn't have follow through. Okay. So price moves back up. This is kind of a poor example because this is a big scam wick. But if you were able to enter somewhere up here, you have high volume. You have ideally overbought conditions on your momentum oscillator, and you're going to enter in the opposite direction. So here's a decent example. We have price go above our mean extreme. So we're above 2 standard deviations here. Our momentum oscillator is overbought. We don't have confirmation from our second oscillator, but you guys can do whatever you want. And then ideally we want to see some volume. So we could just do volume, loom, volume. Standard volume indicator's probably okay. Not a lot of high volume on that, so maybe not the best opportunity. This is a pretty decent opportunity, high volume, not oversold, but our other momentum oscillators are telling us that we are, and we pass beyond 2 standard extremes. So what you're looking for is confluence between 2 to 3 different technical indicators, looking at things like in a range. We're specifically talking about range trading strategies. You want to have something that lets you know when price is beyond a certain threshold. So a threshold indicator, the Bollinger Bands are decent, VWAP's decent, moving averages are decent, whatever Keltner channels, pick something. Doesn't really matter. Some things are better than others, but everybody focuses on like finding, what matters is the strategy. What matters is all of the things bundled together, like Progressive. We bundle things. And we all gonna make it, XRP. Hell yeah, man. You guys keep watching this channel, y'all gonna make it. Tell you what, y'all subscribe to my, y'all subscribe to this YouTube channel right now. You gonna make it. Y'all hit that thumbs up button, you gonna make it for sure. Go download my free guide, 5 mistakes. That's somewhere. There it is. You guys go download my brand new free guide, 5 mistakes holding you back from profitable trading. You're gonna make it. You're gonna make it tomorrow, next day, the day after that. But seriously, 5mistakes.crackingcryptocurrency.com. First link in the description. It's a completely free guide. I go over the 5 most common mistakes I see traders make all of the time. It's come up many times in our mentoring sessions, in our live streams, in our general chat, in our Discord community. And it's my attempt to help guide traders on the right path. So you guys can go download that. It's completely free, 5mistakes.crackingcryptocurrency.com. Love to hear your feedback because I'm going to be putting out a lot of free material like this moving forward. And okay, so confluence between multiple technical indicators. One, a threshold indicator letting us know when price is away from a certain extreme. Let's go over here and look at current price so we don't lose our little eye on that. Like, see, here's a pretty decent example. Like, what is price currently doing right now? All right, price just traded down, up from the top, down below, came out of the extreme, some pretty nice high volume. We have confluence between our momentum oscillators. And so we could do something like an intraday long here, right? So give me a second and I will show you what that looks like. I just move this over to this screen. I want to keep you guys waiting in anticipation and agony. Boom. So yeah, this would not be a terrible spot to look for an intraday long. You've got everything that you kind of want to see here. You've got sell off down. You've got confluence on your reversal oscillators here. Wave trend's almost oversold. Nice high volume. And then typically you'll take price back up to the mean. That's how you would do this. Or you can use Quadriga. Your stop loss and your take profit targets. Did I say free? I sure did, man. Oh, you know what? Now that I've got the now I can experiment with playing music on the stream. Now that I can just like click it on and off with the button. It's a little off right now. Wow. Man. Writing my own script tonight. Yeah, so let me, you know. Yeah, so nice intraday, short-term time frame long here, maybe up to about 21,285, and then we hold that hourly short. Hourly time frame still trading in that tight range. Bulls unable to make significant progress. However, we are putting in higher lows, higher highs so far. And I would buy with prejudice any breakout. Having said that, I've been positioned since 17,000 long on the weekly time frame due to the regular bullish divergence that we saw on the weekly time frame. I'm flat on the daily. We took this trend. I entered on the 7th, entered long here, and we closed out. I remember if it was Thursday or Friday. Pretty sure it was Thursday. And I'll be looking to take a reversal short out of this range. We are looking overheated here on the daily time frame, just waiting for some confirmation. But I'll be buying any hourly breakouts with prejudice. And an hourly breakout is a close above one of these highs. A close. Forget this high. But a close above one of these highs, I'd go long on. Till then, I just continue trading the range. But I think the big question we have to ask ourselves is big picture. As I said earlier, is this weekly candle, is it this candle or is it this candle? Those are the questions you got to ask yourself. Alexander Pearson in the house saying we have confirmation. We have a broken rising wedge. By the way, guys, definitely need to sub this channel. If you guys would have been watching this channel the night the FTX collapse happened, senior analyst Alexander Pearson in the house, we were at 15,000, telling us all to buy the dip. Insights you won't find anywhere else. Man's genius. We want to do the candle closes. That looks even better now. Alex 81S. I'm drawing from. Okay, 1 second. Tell me what I'm doing wrong here, Alex. Alex81SG says, I've noticed that over 50% of the long liquidations last week were from OKEX, which is very unusual. Any idea why that might be? That is the kind of question that can generate real alpha. That's the kind of question that can generate real alpha. That's a good question. That's a very good question. Why is it that 50% of the liquidations on longs came from OKEX? Is it the way they've structured their markets? Is it a change in their derivatives contract? Is it whoever is trading on that market? Is it who's making the market on that contract? Is it just the amount of liquidity that's on OKEX because all the liquidity from FTX had to go somewhere? Is it because all the liquidity from Binance had to go somewhere with the Binance scare? If you find that answer, you might find an edge. Because I don't know. I don't know why 50% of the long liquidations came from OKEX. I don't know. Also, community poll. How many of you guys are familiar in the United States with using the cryptocurrency exchange Pionex? Very interested. It is on my list of exchanges to kind of test out and really give the full to. So I'm eager to hear your guys' experiences and thoughts about Pionex. Gian, shout outs to you. Thank you so much for subscribing and welcome back to the show. Alex is like, nah, dude, just stop drawing. Just don't draw lines, man. You don't know what you're doing. Just stick to fundamentals. Yeah. You guys are absolutely amazing. Thank you guys so much for attending live. Unfortunately, I can hear the supper bell coming from the other room. I know I've been doing these streams late and I know they've been a little bit short, but that allows me to get out the rest of our great pre-recorded content, which, to wit, let's talk about that. You guys might not know this, but if you are a subscriber to the Trading and Investment Group, not only do you get access to my daily market updates in both Discord, and also I send them out now as a very pretty newsletter, access to all of our automated strategies, and access to all of our online Trading Academy courses, such as Pathways to Profit and Risk Management. I was going to say you also get access to the new pretty newsletters that I send out, but I've already said that. So moving right along from that, but I'm also doing a lot of great pre-recorded content, with the most popular being our recent ChatGPT video on how to use ChatGPT to generate profitable PineScript code. It's been viewed over 220,000 times now, so definitely our best performing video on YouTube. So very happy about that. Our next video, which will be coming out this Friday, will be on Bitwarden Unified, how to set up your own password management server. So moving into the digital age, you absolutely have to be somewhat competent in the field of cybersecurity, understand how servers work, and have very secure password management if you don't want to be another victim of LastPass. And recently, I just heard the other night that Norton LifeLock with their password management software. So this is Norton. This is Norton. This is one of the biggest antivirus and digital security companies on the planet. Their password management software got breached. It is an absolute plague. And I think that the days of cloud-based password management systems are behind us. They're just too big of a honeypot. They're too big of an attack vector. And if you don't know how to set up your own server, secure it, and run your own instance so that you're not a big target, you're in trouble. So I'll be releasing that full tutorial this Friday. The course is already on the website. Definitely go check it out. And there's lots of ways to get involved with our community. Make sure to join our Discord, all these other things. But that's it for me today. Thank you guys for joining me on this blustery cold. We're about to get this massive snowstorm here in Colorado. Tuesday. I hope you guys trade well, trade safely. I hope that you guys continue to be profitable. If you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, or as always, death threats, please leave them in the comment section below and I'll get to them as soon as I can. Lots of ways to get involved. Join our Discord, whatever you do. Like and subscribe if you haven't already. Incentivizes me to keep making good content. Be good to each other. Have a great evening. Make sure to tip your waitresses. Trade safely. And I'll see you on the next one. Cheers, guys.